The Nikkei crashed 16% over the past 2 days. That is the steepest tumble since 1987. Some respite, Asian shares have rallied today, recouping some of the losses by the close in Japan. Well, joining me now to analyse the global impact of the Japan crisis is Stephen Roach, non-executive chairman at Morgan Stanley Asia. Thank you very much indeed for joining us today. Now, I know that you're not a nuclear expert, but unfortunately we're all having to really now take very seriously what's going on in Japan, and it makes it very difficult, I would imagine, to try and assess what kind of effect this is likely to have on Japan's economy.
Well, look, none of us know with any precision, even though there are a lot of estimates out there, exactly what the ultimate damage is going to be. But we can use our macro toolkit to get a good sense of some of these directional messages. And I think the bottom line for Japan is it's a weak economy. It's been a weak economy for 20 years. And when you hit a weak economy with a shock, the odds of a relapse or another recession are much higher than would be the case if it were a stronger economy. The Japanese economy contracted in the final quarter of calendar year 2010. It'll most likely contract for another quarter or two because of this devastating tragedy. So it may well be that this shock pushes Japan into its fifth recession of the post-bubble period.
And is there much that Japan can do about this? What should they be doing to try and limit this situation? I'm thinking of what the Bank of Japan's done already and what kind of effect that's had.
There's nothing they can do to eradicate the damage. They can certainly focus on rebuilding. There will be a rebound effect associated with the rebuilding. There was exactly that type of a phenomena in the aftermath of the earthquake that devastated Kobe in 1995. But these rebound effects, all they do is replace production that had been previously destroyed. They don't change the fundamentals of what's still a very weak post-bubble economy in Japan.
But of course, the rebuilding is very costly, and Japan is an indebted country. At what point does that balance tip the wrong way and Japan just doesn't have money for this?
Well, we've been worrying about Japan running out of money for over a decade. When the bubble burst in the early 90s, the sovereign debt to GDP ratio was about 50%. Today it's over 200%. They get away with it because their interest rates are close to zero, both short and long-term rates. If those interest rates were to go up just a fraction, the debt burden would strangle them. They clearly do have an unsustainable debt problem, and the Japanese authorities have not figured a way to extricate themselves from that.
Looking at the rest of the Asian economies, they are very interconnected. I mentioned China in the introduction. What kind of knock-on effect is this likely to have? Well,
I just want to correct one thing I think I heard you say. China is not the largest trading partner, or Japan is not China's largest trading partner. Japan accounts for about 8% of China's total exports. The U.S. and Europe combined are about 40%. That's not to say that Japan is inconsequential for China. There are a lot of supply chain effects in terms of the automobile area, some of the IT products such as flash drives. They feed a lot into the increasingly China-centric Asian supply chain. There will be some knock-on effects.
Okay. I think we've been looking at oil very closely before what happened in Japan, and maybe we've taken our eyes off that oil, that commodities issue that we were focusing on. It's interesting that the oil price, this spike, has gone down. What's your assessment of that? What do you attribute it to?
It's hard to interpret these very short-term volatile movements. I think the recent drop certainly is tied to the fact that the world's once second, now third largest economy is going to be stopping, or is stopping production for a while, so its demand for oil falls as a consequence. But I think you're right, Andrea, to look at these various developments collectively. It's not just that Japan has been hit by a devastating, catastrophic earthquake and tsunami, and now with the nuclear issues. It's that oil prices are up. There's a sovereign debt problem in Europe. There's turmoil in the Middle East, as you just described. You put them all together, which you must do. You can't just isolate one shock and try to assess it. You put them all together and you look at them in the context of a global economy that was only just starting to come to life after the worst recession, the worst crisis since the 1930s. And the question that must be asked in that context is, how sustainable is the global recovery? And I think that's what the markets are grappling with right now.
And what are your feelings on that? Because of course, it's people, they look to people like you to suggest what may well be happening.
I'm worried that we've gotten complacent and optimistic. And just a few days ago, before the tragedy in Japan, we were celebrating on shows like this the 2-year anniversary of the doubling of the stock market.
Yes.
From its March 2009 lows. Open-ended growth, open-ended recovery. There was a great book put out by Ken Rogoff and Carmen Reinhart called This Time is Different. It was a cynical title to say it's never this time is different, but the markets were saying maybe this time is different. After a crisis we can have a classic V-shaped recovery. The markets went very far in making that bet, and I think this correction we're seeing in global equity markets is a rethinking that maybe this time is not so different after all, post-crisis, post-bubble for the world.
Indeed, but it's very, very hard at this point. I mean, the volatility that's reigning at the moment is presumably going to last for a while. It's very difficult to know what's going to happen in the Middle East, indeed, even what's going to happen in Japan.
It's always difficult to sort of try to step back and draw a deeper meaning into these very short-term developments. But I could be wrong, but we're living through a tectonic shift in the Middle East. The Middle East will never be the same again, and that is very clear. Whether Gaddafi prevails or not is irrelevant. The Middle East has been changed permanently. Japan will rebuild, but Japan has been a weak economy for 20 years plus and will probably still be weak. So that's the world we need to look at.
Stephen Roach, thank you very much indeed for joining us today.
Thank you.